Hey, so you know who it is? It's the bearded one, formerly known as the bearded realtor. So in today's video, we're going to talk about DSCR loans. So it's a new program out that helps investors to purchase property on the DSCR loans. So that's what today's video will be about. I got Miss Cassandra Dorsville from the Dorsville Group, and we have a lovely new office.
What's up? What's up?
In the office. So now we have an actual space to do our video. So stay tuned for this video right after this. All right, so let's get into today's video. So we talked about DSCR loans. So tell us, before we get into that, Maurice Murphy, formerly known as the Bearded Realtor, Realtor in Jacksonville, my preferred lender, Ms. Cassandra Dorsville. And on this channel, we talk about real estate and, of course, beers. All right. So let's get into today's video. DSCR loans. What is that?
Yes. So a DSCR is the acronym. What it stands for is Debt Service Coverage Ratio. And basically what this product is, it's great for investors, allowing investors to purchase properties where it's not factoring in their personal credit obligations, their income. That's not a factor. What's a factor is how much you can receive in rent for that particular property in comparison to your proposed mortgage payment.
Okay.
So for example, let's say you're buying a investment property and your payments are going to be $1,200.
Okay.
But you know that you can easily rent that property out for $1,500.
Okay.
Well, in that case, your DSCR ratio is over 1%. And at that point, it's sufficient. Like that's what the lender looks at to see, okay, are you going to be able to collect enough rent to see a profit for that investment property? Gotcha. So we do have some lenders who, like for the most part, a lot of them wants to see at least a DSCR ratio of at least 0.5%. We have some that can look at 0%. And like I said, ideally what that's being based off of is your rental potential income comparison to your mortgage payment.
Gotcha. So let's unpack that a little bit.
Sure. So
basically what I hear you saying is basically DSCR is a way for an investor to purchase property based on the rental income they have coming in.
That's correct.
And so that's based on a percentage of how much they can collect. Like we said, if it's 1,000, they can collect 1,200. It's a percentage of that. Some may be 1.5 or 0.
Yeah, it's a whole math behind it, but for the most part, for the masses to understand, it's ideally being able to collect a rent that's greater than your mortgage payment.
Okay. So what are the requirements to get a DSCR loan?
Well, some of the basic requirements, at least have a 620 credit score. Okay. You have to already own a home. Okay. So you have to already be a homeowner of your primary residence. Okay. That's really the main qualifier. Okay. Are just those two basic things. There's really not much to it. Obviously, the higher the credit score, the less you would have to put down when you're looking to purchase with a DSCR. Another thing that I like about it too is that because a lot of investors, when they're purchasing investment properties, they like for that property to be in a business name. So that's one thing I like about this is that you can acquire this property using your actual business. Gotcha. And it won't appear on your personal credit.
Gotcha. And so with that being said, so how would someone qualify? You have to have. Do you have to have a LLC or you don't have to have an LLC?
No, you don't have to. I mean, I've had some that I was able to get them approved in just their personal name. Okay. But it's obviously better if you can do it in your business.
Gotcha. And then what are any other qualifications that are required? You said 620 credit score. Anything else?
And already own a home. Okay. Yeah, I mean it's so easy. Gotcha. You don't have to have experience like a lot of hard money loans. Like if you're doing a lot of fix and flip, to get the best deals, they like to see that you have experience. But we have lenders that don't really require experience for the DSCR product.
Gotcha. And so you brought up something that I wanted to ask about. So how is this different from hard money loans?
So hard money, typically you have to have an exit strategy when you go hard money. So either you go hard money to do a fix and flip, or you do a hard money to go to fix, and your exit is to refinance. Yeah. Okay. So I've had situations where we use the hard money to fix the house up, and then refinance it into a DSCR loan, because then ultimately that's the end game.
Gotcha.
So that's really the difference, is just that you have the ability to utilize that money to acquire the property and putting your down payment based off of the after repair value, versus if you do a DSCR, your down payment is based off of the acquisition price, your purchase price.
Okay, gotcha. And so we talked about it before. So it does not go in your credit report. So
if you do it as an investment property.
As an investment property.
I'm sorry. If you do it in your business name.
As a business name.
In your business name,
okay.
Yes.
So as long as you're doing your business name, it won't show up on your credit report.
Correct.
Okay. Now, what are some of the pros? We talked about a lot of pros. What cons are there with the DSCR loan?
I haven't seen the con.
I've seen one.
Okay, well, help me understand.
Okay, so now the DSCR, you are required to have a 12-month.
Oh yes.
Let's
yes.
talk about that. Let's talk about that. Yes.
So yes, that could be a con, but you have to think about it too. Well, rewind. So what you're saying, Maurice, there a lot of the DSCR loans come with a prepayment penalty, meaning as though if you refinance or if you sell before that prepayment penalty period is up, there's a small percentage you got to pay.
Okay.
Typically, the prepayment is from 1 to 3 years. The longer your prepayment penalty, the better the interest rate, obviously, because they want to keep you in longer.
Yep.
But you have to understand too, is it's not like a hard money where you're having an exit strategy. So with the DSCR, you're intentionally utilizing this mortgage product to buy and hold.
Okay. Yep.
So it could be a downside depending on what your end game is.
Okay.
Like if your end game is to purchase the property and refinance it in a couple months, then the DSCR may not be the best way. It may be best to do a hard money.
Okay.
And then refinance, because at least that way you have lesser out of pocket because you're going off of your ARV if you do hard money.
Gotcha. So you brought up another question. So out of pocket expenses, what are out of pocket expenses for DSCR?
So your DSCR is typically going to be your down payment, and then your closing cost is roughly going to be about 4% of the purchase price.
Gotcha.
And that's including like the fees that the lenders charge, title, and all the other stuff that comes with buying a house.
Okay. And so with DSCR, you really can't, it's really not a fix and flip or a fix or buying a property that needs to have repairs unless you're going to pay for the repairs yourself.
And that's another thing too. When you do a DSCR, they're lending you the money with the intention on you not making any updates to the house. Like you're renting that house as is.
Okay.
So again, if you're looking to purchase a property and you know that maybe it only needs $5,000 worth of work, and you know with that $5,000 that you'd be able to get more for it for rent, then it may be best to do a hard money with an exit strategy of a DSCR.
Gotcha. Okay. All right. So that kind of gives out my questions about DSCR. You may like it, you may not. It may be a good fit for you, may not be. So
it just really depends on your end goal. So hit me up, give me a call, and I'm more than happy to listen to what your plan is, and we can identify the best product that's going to be best for you, because we have a wide range of mortgage products available for investors.
Gotcha. All right. Well, I won't get into that rabbit hole of all the products you have. We could be here all day.
Right.
But I will say that you do have hard money lenders that you can work with. I think we're at 75% of the ARV is what we're looking at. Most lenders you have.
For the most part, 75%. If you don't have experience, about 70%.
Okay.
But 75% is pretty much the going range.
Okay. All right. Well, that does it for me. DSCR, maybe a good product for you, may not be. So it just be up to you and what your exit strategy is, like you said. Anything else you want to tell the people?
If you want to reach out to me to inquire further about the DSCR products, you can reach me at 904-903-1183.
All right, so you know who I am, Bearded Realtor, formerly known as the Bearded Realtor, and I'll talk to you guys soon. All right.
Deuces.